Hey guys, this is part 2 of the video now in relation to different package, basic and fixed rate structures that you can get. So your different sort of loan offerings that the bank put out there. I am Tim, your mortgage broker for Moreton Bay Finance Broker and your licensed real estate agent, working as a buyer's agent for Moreton Bay IPS buyer's agents. There's a little error. Ryan.
Yeah, I'm Ryan. I'm your licensed mortgage broker working on Moreton Bay Finance Broker.
And you're now going to watch part 2. Thanks, guys.
So then we've got fixed rates, and I'm sure everybody understands what they are, but pretty much once it settles and your loan is fixed for, say, 2 or 3 or 5 years, the rate does not change in that time. So what I usually say to clients is if you go down the path of the fixed rate, you're there for that period of time unless something happens and you absolutely have to sell a house. And unfortunately, relationships do break down. In that situation, you might be up for what's called a break costs, which can be quite hefty. It all depends on what the rate is. So if you fixed in at 2.9% 3 years ago and you're locked in for 4 years and for whatever reason you have to sell the house, the economic loss to the bank is not going to be much because they're charging my interest rate. So when they sell that money over somebody else, they'll be fine. But if you locked in at 9% a long time ago and the rates dropped to 5%, they're going to charge you what they would have lost what they are going to lose by breaking that rate. So I had a client who had to pay $38,000 to the bank on top of his divorce. So he was very unhappy with that. So if you fix it, unless you absolutely have to break it, don't break it under any circumstances. And that's where you sort of want to play that it is 2 or 3 years, sort of a nice period of time to lock it in. And if the rates go down, you think, well, too bad. If they go up, I think happy days and welcome.
Yeah, now I have a very similar conversation when I talk about fixed rates. One thing I do highlight is that break fee. The lowest I've ever seen is around about that sort of $50 mark. The highest that I've experienced is not as bad as Warren's client that did 38. Ooh, that would have hurt. Mm-hmm. My client had 24 and about. It was basically 24 and a half, just shy of that, which was, nonetheless a huge cost to them. Yeah, but not quite as costly as that 38. And the bank will pass that cost to you because it is an economic loss to them. So you just got to be mindful of that.
Yeah, so there's a couple of other things when it comes to a fixed rate. So before the RBA started raising rates, some of the banks were offering interest rates with 2s in the beginning. And one thing you can do when you're lodging an application to a bank is pay what's called a rate lock fee. So depending on the bank, a lot of them charge 0.15% of the loan amount. Some charge a flat fee of $500. Some charge a flat fee of $700. It just depends on the bank's policy. So the conversation I have with the clients, and I locked our pair in at 2.99 for 5 years just before the RBA started raising rates, and they're extremely happy for obvious reasons. Recommended they pay, I think, about $700 to lock that rate. We submitted the application. While it was in the assessment queue, the bank increased the rates by about 1.5%. And of course, since then, it's gone through the roof. Because they paid that rate lock fee, they made that money back within a couple of months easily. And they are extremely happy. So that's a conversation we'll have with you about rate lock fees, whether it's worthwhile doing at the time. For them and for a lot of clients, before when the RBA started raising rates, it's absolutely worth doing. Currently, it's not worth doing as much because the rates are sort of hanging around the same thing and they might come down from there. So we don't know. But looking forward, I think we're hopefully at the top. All the economists are saying there might be one more. I'm kind of hoping when we're done, but we'll see.
I think we're close to the top. Yeah. I'm sort of thinking a little bit along the lines of what the economists say, that it's potentially going to be one more. But time will tell, and, this video will either date very well or it'll date very badly, depending on what happens with the rates. Hopefully, to give a bit of relief to all the families out there and everything else, they start coming back down.
There's just one other thing that's different between fixed and base and variable. So these we're looking at as variables. So if you choose to fix, most of the banks have a limit, a ceiling on how much extra you can make as a payment. Some are $500 a month, some are $30,000 for the term of the loan. We have a fixed rate term, so if it's a 5-year fix, you can pay an extra $30,000 in at 5 years. Same if it's only 1 year. A lot of them are 10,000 a year. So if you're a person who wants to pay down as much as possible while it's fixed, that's another consideration. Some lenders have no limit as long as you don't pay it out completely. That's something that we will look at as brokers to find the best solution for you. But that's obviously a rarity. Most people don't plow all their money into their loan if it's life is fun.
Yeah, and you never know what's around the corner.
Correct.
Look, there are a couple of lenders out there under their basic product. It's very few and far between that will allow you to have a 100% offset account linked to a fixed rate, which is absolutely fantastic on that sort of side of things. But that number of lenders is really, really tiny, and you need to be able to speak to a fantastic brokers who understand those different policy niches with those different lenders.
There's also a couple of lenders who will allow redraw on a fixed rate, but it's rare. In a lot of cases, if you pay extra in the fixed rate, you can't access it.
Yeah.
But somebody can. So again, it's about talking to the right people to know who can.
It's really having that more in-depth conversation with your broker to find out what are the options that are available to you and everything like that. If you do go on a basic and you're on a variable rate and interest rates take tomorrow, hypothetically, right? And you decide, hey, I can get a 3-year fixed rate hypothetically, guys, don't ring me up and say, you said this. Hypothetically, you can get a 3-year fixed rate at, say, 3.5%. Doesn't exist at the moment. Don't call. Doesn't exist. Okay, but hypothetically, you could get a fixed rate and you're on that basic product. The bank's potentially going to change you a loan variation fee, and that can range anywhere from that sort of $100, $150 on the low side up to around about that sort of $400-$500 mark on the high side. So that's another thing that you need to sort of factor in there as well when you're sort of looking at these different bits and pieces.
Yeah, so there are a lot of things to consider, and I mean, habits change, your position in life changes. If you get a pay rise and decide, hey, I can make extra payments, it might be worth giving us a call and having a chat and say, look, something's changed. What should we do? Should we change from a fixed to a variable or a basic? Or should we get an offset now if we didn't have an offset before? That sort of thing. So there's a lot of conversations you can have with your broker to work out where you want to go on any one thing.
I recommend it's a really great, fantastic strategy that every 2 to 3 years, you sit down, have a chat with your broker, just have a bit of a review on everything like that, potentially do a bit of a health check, see where everything's sort of sitting on that. Now, obviously, if you potentially change jobs or your situation dramatically changes, don't leave it 2 years or 3 years to sit down with the broker. Ring them around about the time and they can arrange a time to sit down with you, have a bit of a chat and work out what that strategy is going to be looking forward and everything like that. The strategy might be as simple, hey, let's go see if we can beat up the bank on your variable rate and see if we can get something a little bit more competitive and we'll have a chat in 12 months' time. Or it might be, hey, here's some better options. We've had a bit of a beat up on the bait. Unfortunately, it haven't come to the party. Here's some better options. What would you like to do? At the end of the day, you're going to drive the bus.
I try to reach out to my clients at least once a year and try to achieve a better rate, even if it's a couple of months off, just because at least it shows the bank is interested in keeping them and retaining its customers. The bank should work hard for the money they're earning off it. So that's what I do.
Fantastic. We're probably going to split this one, I think, into 2 videos once again.
Mm-hmm.
So what we're going to do is we're going to have a little bit of a cut here. And you will get part 2 in a future episode, in a later episode, probably later in the week or early next week. So stay tuned to get part 2 of this one here. It's all been in relation to different features that the banks offer. So, that package product, the basic product, the fixed rates, and how those different structures can fall. Thanks, guys, for watching the second part of this video. It's been fantastic having you here today again for part 2. I am Tim, your licensed buyer's agent from IPS Buyers Agents and your mortgage broker from Moreton Bay Finance Broker, and this is Ryan. Thanks, guys. Bye for now.